Hello and welcome. Thank you all for being here today. I am Nick Kanoki, the Director of Technology for the Asset Leadership Network, and I am very excited for today's ALN Roundtable, People Are Not Assets. As you can see, we have a great panel here with us today, and we will do a little bit more introduction in a moment. But first, I just wanted to thank our ALN patron members, Definitive Logic, Onuma System, ABS Quality Evaluations, and of course ABS Group, as well as our other organizational members. And as you can see, it's a growing list. So if you're interested in working with the ALN, please reach out and we will get started. Other than that, I would just note that we would love to hear from you if you're out there watching or listening in. So please send any comments, questions, or feedback to the chat, or use the Zoom Q&A function to put any comments or questions to the panel. And Mike Bordenero, Executive Director for the ALN, is going to do a bit more of an introduction for our panelists. Mike?
Thank you, Nick. And thank you to all of our roundtable participants and all of those of you who are attending. And this is quite a panel. We had a lovely pre-event discussion on this somewhat esoteric concept of people are not assets, but words matter. And if our leaders are going around saying that their people are their best assets, then they don't understand asset management. And we would like to put a stake in the ground right now as saying people are not assets, and we need to stop changing that. Although Dr. Monique Beatles put the stake in the ground before us, she gave a presentation a couple of weeks ago at the Australian Asset Management Council AMPEAK conference, and her paper and her presentation was why your people are not your greatest assets. So we're going to start off with her since she has some material in the can, so to speak. And Marty Rowland is an ALN Senior Fellow who has had an arm wrestling match with the Six Capitals concept of human capital. And I've kind of helped determine that the humans aren't the capital, it's the output of the people, and that is the capital, the intellectual property, the patents. And Dominic Townsend, president of ALN patron member, ABS Quality Evaluations, and he is the ALN board member, will be giving his perspective from how people, he's observing organizations who are certified into ISO 55000 and other standards, and he'll be providing that wide spread perspective. Cecilia Mowatt, president of Strategy Insights, is an ALN organization member, a lawyer, and is a very strong advocate for ISO 55001 4.2, involve all relevant stakeholders, and she's got a very strong perspective on people are not assets. And we were very pleased to be introduced to Nick Shepard through ALN member organization Smart Companies president Mary Adams. And Nick is the author of a couple books on finance and management, and he is well-versed in Six Capitals, and he's on an ISO committee for health and safety. I think I've got that wrong, but Nick will explain that further. But first, each one of the panelists will give a small statement about their perspective on people are not assets. We'll start off with Dr. Monique Beatles.
Thanks, Mike. Good morning, everyone. I say good morning because I'm coming to you from Brisbane, Australia. So it's lovely to be part of this conversation. So thank you for the invitation. As Mike has mentioned, I've recently presented a paper to our asset management conference here in Australia, and really around this topic. And why it's important to me is that most of the work that I do is at the senior leadership level with boards and executive teams, and I do leadership coaching and development of leaders who are asset management professionals. And so it's really important that we make a distinction between people and things. and but we understand that people are not things, and therefore that people are not assets, because that's really important to the way we make decisions, the way we treat people as leaders, and also the way we develop our leadership capabilities, because our technical skills are not enough, our business perspective is not enough. We need to take a human approach if we're going to get the best from people and if we're going to do our best work. So in the paper, I talk about the legal and grammatical distinction between people and things, and part of that, part of what's important to understand about that, in particularly the way we talk about asset management, realizing value from assets, is that assets have value only for their utility, for what we can get from them, but people have value in their own right, inherent value. So an asset is a means to an end, but a person is an end in themselves. So that's the core concept that you know, I've dealt with here, and I think that's important and that we can explore further. So it has a lot of follow-on effects to the language we use, as we've mentioned, around capital, resources, and so on. And the core thing that we don't want to be using language that is dehumanizing, because what it does is it means we treat people just like a machine or some other inanimate object, and that's not what we want to be doing. So that's the core of what I'm
and
yeah,
Monique, will you share the titles of your books?
of my books.
Yeah.
Yes. So look, my earlier book is Asset Management for Directors, published by the Australian Institute of Company Directors, and it's very much a board's perspective on why asset management is important for them and what they need to understand about it. My most recent book is Leadership Assets. So this is really about leadership for asset management professionals and the skills that they need to develop. I have some other books, but they're probably the most relevant ones.
Okay, thank you very much. So Marty is an ALN Senior Fellow, and he's on, is it the board of the Henry George School for Social Science?
Yeah, I appreciate the opportunity to present. I guess what I'm going to be talking about today, a little introduction, kind of informed by my doctorate in essentially environmental resource economics, but also my involvement with Henry George School. I do work for the New York City government, so you know, I'm not going to be speaking on behalf of those, but these are my personal views. I wanted to just read a few things. It's only going to be 60 seconds. My task today is to take part in a notion that everything is capital and ask why we tolerate such a perversion of intellectual thought. By that, I mean capital is merely one factor of economic production. In fact, it is the only factor out of three that is not essential to production. Take a person picking low-hanging fruit. Labor raises a hand and removes an apple out of the tree. The apple essentially is economically land. Production results in one apple. Capital only comes in when the intelligence of labor uses a ladder or a basket to create more wealth. I understand why the head of a firm may want to pervert this basic notion and call the apple picker and the apple capital. It is a smokescreen to hide the fact that they once mistreated workers and failed to properly steward the orchard. So perhaps production with three capitals is a course in CEO reform school, but there's no need to change the notion or the nation's school books for their unique failure. It is their problem that does not need our fixing. Labor, which humans, need to be nurtured, allowed to create their own institutions, and be invited to share in reciprocal, trusting relationships. Only the laborer owns their labor. They are not anybody's assets. Likewise, the owner of land, the orchard, must pay society a reasonable resource rent for their privilege of keeping others out of it. And others have a duty not to enter the orchard. And society has the obligation to enforce these basic agreements known as institutions. And the rent in this way is the revenue that we use to pay for such things as police and environmental protection, healthcare, and those kind of things. So land is its own factor of production, and the rent obligation is what takes Homo sapiens out of the state of nature. We all know that the titans of industry will not do that, take humans out of state of nature while calling everything capital when there's no obligation to nature and people. There's a need for clarity, not obscuration. Remember, 3 unique factors of production: land, labor, and capital, not 3 factors of one kind. So that's my opening statement. Appreciate the.
You don't have any opinion on this topic at all, do you?
No, I wanted to make it very clear what I had to say.
No, that's great. Thank you for taking the time to write that out and sharing that with us. We look forward to your discussion with Nick. But right now, let's give Nick Shepard a chance to make his opening statement.
Great. I mean, I'm sort of intimidated after Marty's introduction. I feel I'm in, and especially with Monique, I think I'm in the company of intellectual giants here. So,
well, you've written a couple books.
Yeah, I'll talk about those in a minute.
Okay.
I'm coming to you from, as you can see, from a log cabin in that's on the banks of the Ottawa River, just west of Canada's capital. And I'm theoretically retired. I've had about 50 years in business. My first 25 years were mainly in finance, rising to the position of CFO in a fairly large organization. Then I went into general management, was president for a business for a period of time, and became more and more convinced that people are actually the most critical component of organizational activity. I agree 100% with what Monique said in terms of the importance of leadership. Anything that we talk about related to people has to do with effective leadership. And I spent, after I finished my sort of stint as a CFO, I started my own training and consulting company and did a lot of work in the area of organizational values, organizational culture. And that is indeed the subject of 2 of the books I've written. One is called Corporate Culture, Combining Values and Purpose. And the other book is called The Cost of Poor Culture, which really talks about the hidden cost of organizations that don't pay attention to exactly the issues that Marty and Monique are talking about, which is the nurturing and responsible stewardship of the people in the organization. We will talk a little bit about the 6 capitals. One of the problems is that we sort of backed into the term human capital because capitals are the resources that organizations use for their business model. And so humans are a key part of the resources. And because they wanted to call everything capital, they ended up calling it human capital. So we kind of backed into that. And we'll talk a bit more about that later. But the most important, the most critical thing is people in the organization. And that is my passion. And there's a number of other books I've written. I'm ashamed to say, recently written a book called Understanding and Reporting Human Capital, which I'm sure if I could see Monique's face, she would be scowling at me at this stage. It's unfortunate that we've used that phrase, but I think we get hung up on the labels, and I would go back to exactly what Marty said. So I look forward to the discussion. Thanks, guys.
And Nick, will you talk a little bit about your involvement in ISO?
Yes, I belong to something called TC 260, Technical Committee 260. We had a discussion in our sort of pre-call about that. It's a series of guidelines and standards and technical specifications around the area of human resources management that started in around, I think it was 2014, that ISO has been working on. The specific area I'm involved in is ISO 30414, which is called Guidelines for Internal and External Reporting of Human Capital. So it has the capital name on it. Interestingly, I went back and checked after our discussion earlier, Mike, and every other document in the series of TC 260 publications refers to human resources. So capital is only used in the terminology of reporting. So I think it'd be interesting to get into how different terms are being used for different purposes when we talk about people. I was chair of the Canadian committee. I'm now just a member of the committee.
Thank you.
Pleasure.
Now we'll let Cecilia have a chance to introduce herself further and make an opening statement.
Thank you, Michael. I am thrilled to be here for this conversation because this is a topic of great interest to me also, Nick. The issue of what we do is not done just for the process of creating widgets. Whatever any organization is doing is being done for somebody, to somebody, and with somebody. And we hope that it's being done in a sense of prospering people and helping people and not doing something nefarious. And when Michael said that Monique beat us to it, I kind of disagree. We didn't publish the fact of our beliefs as much, but we did, as an organization, ALN has put a stake in the ground early on, thanks to Mike Bordenaro having said and corrected us on the issue of using people as assets, because as he said, in a country where we have a sort of checkered history in terms of ownership of people, and that's global. Slavery is something that was global. And so he cautioned us as we were looking at ALN's program and the current ALN Advancing Equity Board, Advisory Board, advancing equity through asset leadership using ISO 55000. Mike made it clear that we could not refer to people as assets. So one of the things that I countered him with is, okay, that's fine. They're not assets. It's not the people being assets that we're talking about. We're talking about the relevant stakeholders, which is what ISO 55000 sends you to. And it sends you to looking at those relevant stakeholders, not for their position as assets, but for the relationships. So the issue is relationships, the relationships that we have with people, and refocusing our efforts on relationships that are internal, external, and incidental, that we make sure that whatever we are doing it to the betterment of all of our relationships with the human citizens that we encounter. And in the whole concept of economic development that I have worked in throughout my career, and that is the focus of Strategies in Sight. Economic development, I always say, is for the people, of the people, and by the people. And so that would be my opening, that we need to look at the relationships as well as looking beyond the usual suspects when we look at relationships.
Yeah, and the relationships they have with their intellectual property and their copyrights and their patents and contributions.
Right, and that would then be exactly their contributions or the impacts that we have on people as well.
Yes, thank you, Cecilia.
You're welcome.
And Dominic.
Thank you, everyone. Thank you, Mike. I'm Dominic Townsend. I'm president of ABS Quality Evaluations. We're one of the leading business assurance and management system auditing organizations in the world. And my focus is to really talk about management programs, what we audit, and a lot of it's built around trust. We audit organizations to make sure that a program is meeting a certain objective of a client or a stakeholder. But it's also, when I look at successful organizations, we talk a lot about leadership, we talk a lot about people. And I'm a firm believer that a success of any organization or a success of any management system program is based on the collective efforts of all the individuals that work within those organizations or work within those processes. So when I look at people, that to me, they're the ones that make the difference. And leadership is to ensure that there's commitment at the top level. and making sure that there's appropriate resources to really drive success. And when we look at those organizations, those top-tiered organizations that are successful, it's built on a team of people that are very focused on one common goal. And like I started off as we audit organizations all around the world. And we love partnering with our clients because they are leading organizations dependent on the programs that they're audited towards or the standards that they've implemented.
Thank you, Dominic. And let's have everyone turn on their cameras. But Dominic, let's stick with you. And let me ask you, how much do you see people being listed in ISO 55001 certifications? And what type of language do you see when they're filling out their certification forms?
Well, when we're auditing organizations, like one of our largest clients is an airport, and our first approach is working with their leadership team. And I could say that their leadership team really recognizes the importance of all those people that have implemented a management system program within the organization. And that's why this airport is one of the top rated airports in the world. And when I look at that, and when we get out into our audits, we're continually speaking with people. Most of our audits, it's all about people. We get out in the field, we want to make sure that those organizations and those people that are working in the field understand the programs that are being rolled out, why it's being rolled out, what are their processes and practices, that it meets the intent of the specific standards, and they're appropriately trained. And that's what we see when we're out there in the field.
Okay, thank you. Monique, in your activities with many boards, you're involved with leaders, and you frequently hear them say, our people are our greatest assets. What is your response when you hear that?
Well, it depends a little bit on the situation, but I do hear it all the time from boards, from HR managers, from other leaders. And I do like to then, depending on what the context is, but to challenge them on that and say, well, are people really assets, and is that the way you treat them? Because it then does cause them to think, and I think that's what the whole objective is to get people thinking about, well, what does that really mean? And are you just going to insert people into your system, as you do with any other thing? Or are you going to, in fact, take, as Cecilia has pointed out, it's the relationships that are really so essential. Because what I then do see, as Dominic has said, when you go out into organisations and look at what they're really doing, that quite often there can be this focus on putting the documentation in place, putting the systems in place, building the artifacts that are required for the management system, but they haven't developed those relationships or done that deep engagement that's needed to really get people involved and to make them effective in getting the best outcomes from that system that you've developed. So I think that's the challenge to those at the board level or at the senior level, is to say, well, yes, you can tick a box that you've put certain things in place, but have you really engaged people in the way that's required to make this effective?
Thank you. Nick, I see you smiling, and I wonder, because you've been on the boards, you've been at that level too. Please share what's going through your head. I'm dying to know.
Well, I think it's a couple of things that are fascinating. One is you have to go back, and it's part of what Marty talked about, I think, is that, and this to a degree, I think, ties back to the use of human capital in the integrated reporting in the 6 capitals. We're coming from a mindset where sort of the classic men, machines, and money was the business model. So that has a number of issues with it in terms of terminology and labels, obviously. But we're coming from a thinking set that is the business model. That is the value creation model. And so if you think about the underlying reality that's taken place, value creation no longer comes from machines. Value creation comes from people. And so we're having to get our head around the dynamic that you cannot treat people like machines. So all of the thinking that we had in the past about how you plan work, how you manage work, how you do work, you know, machines are wonderful. They pretty much follow instructions, but people don't. You know, people think for themselves. People want to contribute. People want to build those relationships. And so our method of dealing with them is going to be profoundly different. And we have to learn that. So although we've got these labels like assets, and in a way I can understand, I can see, you know, I was interested in Monique's reply. I'm not sure I would get that upset with people who put the wrong labels on it, providing they understand the underlying issue that Monique is talking about. To me, that's the most important issue. And I think Cecilia may have mentioned it, is the whole issue to me, and we talked about this in the pre-discussion, is the whole issue of responsible stewardship, right? Because if you think about what we're accountable for as leaders of organizations, it's for responsible stewardship. Now you've got a whole different umbrella, because what you got now is that works for the environment. If you exercise responsible stewardship, you're going to be doing the right things for the environment and climate change. Likewise, you're going to do the right things for people. And people, as you say, are the drivers. I mean, everything, if you think about it, and this is where the financial background is to a degree my driver, you've got cash. What do you use it for? Well, you used to use it to buy machines. Now you use it to pay people. And the fact is, people create all of the other things that you need to create value. People build relationships with suppliers, people build relationships with each other, people build relationships with customers, they build relationships with regulators. And so your machine, your engine, I mean, the whole creativity of an organization is people, and really responsible stewardship of people, in the same way that I don't think you treat every asset the same way. I think you use a different set of rules when you're talking about people as part of the business model.
And in our pre-event discussion, Monique brought up the fact that in the 1970s, 90% of the value of Wall Street was in physical assets. Now 90% is in intellectual property, copyrights, patents, and other intangible assets. And the Six Capitals movement was a good-hearted effort to break things down instead of only looking at the bottom line, to look at other things. And it was directed towards the financial market, the finance industry. So it made sense to think in terms of different forms of capital. And so, Nick, I appreciate what you're saying about, the intent is more important than the words, but words do matter. So let's let Marty have a little more time to talk about why it should not be human capital or even human resources. In our pre-event, we said even human resources is not an appropriate title. It should just be humans.
Yeah, I get
Or relationships.
Yeah.
I think we're going to get the relationships in there.
Human relationships. Okay.
I guess I'd like to take it to a little different level and talk a little bit about my involvement with the TC 323 ISO Committee on Circular Economy. Recently, I was able to get the standard that I wrote in ASTM on infrastructure management inserted into the circular economy draft standard as a complementary method. And the importance of that is that it's a little provocative once you understand what it is that that's about, because rather than let's say the people within the corporation having the value, the standard that I wrote in ASTM, which is called E3210 on infrastructure management, it requires that people who adopt that standard to engage the public twice every cycle and have a full accounting and transparency. So if a city, for example, took that standard and was really honest and upfront and where the money comes from and where it goes, there's two opportunities for the public to have input. And I think everybody knows when the city typically has a public hearing, or the state or EPA, they already know what they're going to say. So they just go there. Somebody could be screaming from the back of the room, and they're not going to change what it is on their sheet of paper. So it's a little provocative to have a standard that actually requires to listen to what people say and really have some input on, we want X, Y, and Z. This is what our budget is. Where could we get the extra money to do what it is that we need to do? Well, let's knock out and drag out where the money actually comes from. Maybe there's better ways of doing things. So I guess I'm taking it to a different level of not the people within the organization that's creating the value, but people who are on the receiving end and paying for things, having some input.
Cecilia, that's a perfect
That's
handout
a
to you.
segue to me. That's a segue to me because, again, the relevant stakeholders, ISO 55001 4.2 says that we must consider the relevant stakeholders. And my cry always is, please, please broaden your definition of relevant. And relevant means anybody that you are affecting, anybody that comes into contact with your organization's mission and activities. And so when Marty does his standard, it says, let's formalize the discussions with your external stakeholders. This is critical. And I think organizations are moving more and more towards this as we look at companies that stop and say, wait a minute, we are citizens. Corporations have a status as a legal status as a citizen of the communities in which they reside and operate. And Nick, when you were speaking in terms of the man, the machine, and money, we are now moving more into the concept of corporate social responsibility, ESG with the environmental and social governance, and marrying what is the business mission and who is the business mission intended to benefit, and how are we measuring both benefits and risk mitigation on detriments to those that we come in contact with, whether they're internal or external. And so this is critical that we start thinking this way. I wanted to ask Nick as a CFO, because one of the things that we have struggled with, and in our conversations with Mary Adams, we did discuss this issue of return on investment does not have to just be quantitative. We need to start creating our measurements for qualitative returns that bring shareholder value in a different sense, because we look at the shareholder value model, it's only going to say what's in the marketplace on Wall Street. That doesn't get Main Street, and we need to get to a return on impact, the big I, supersize I, from every organization. And I'm wondering what you as a CFO, Nick, think about that. And then I also want to counter your comment of people. We've got to be careful, because in a world where AI, artificial intelligence, is creeping up and we're using robots, we still have to remember that people program robots. But artificial intelligence, what do we think? We can go into that a bit too. Throwing it back to you and Monique to talk about.
I'm happy to respond. I think, I sometimes say, I am a reformed accountant, because I have a somewhat different view on that than I would have had as a CFO. And it's called maturity and learning, which is something we do through our life, I think. I think when we talk about stakeholders, one of the very interesting things that's actually in progress right now, there's been a whole bunch of changes go on in this integrated reporting framework that started in the UK, in fact, in 2011, I think, and came out with its first framework in 2013. And it's since evolved, and many of you may know that in recent years, in fact, in last year, there was a major amalgamation of all of these bodies, including SASB and the standard setting bodies. And we now have all of the standard setting related to sustainability, which was the whole purpose of the integrated reporting framework way back, now falling under the Financial Accounting Standards Board. And I asked a question of that board recently about, well, hang on a minute, one of the key issues that was discussed when we were talking about sustainability and multiple capitals was a stakeholder view of the evaluation of what we should be reporting, you know, what we're accountable for in terms of the conduct of our organization. And there's a process in there called materiality, which you're supposed to do is to go through and determine which, you know, what is material for stakeholders. The European view is that they think something called double materiality is critical because it takes into account not only what's important to the financial stakeholders, but to all other stakeholders whose concerns are part of the organization. In a recent conversation a couple of weeks ago I had with the people that are putting this amalgamated group together under FASB, they are pushing to go back to single materiality because the reporting goal is principally for Wall Street and the financial community. And I think it's going to be very, very interesting to see where that goes, because I think it has a danger of a major retrogressive step.
So to that end, Nick, so to that end, that's very scary in one sense, because progress was being made and then now progress is going to go backwards because people don't know what to do with it. And they're a little nervous about creating new metrics. But just like we create metrics and pull out of air goodwill, and Ron Lurie asked the question, why isn't the potential of humans to create value in the form of IP and related intangible assets rather than the people per se, a form of capital that increases the economic value of the enterprise? Well, we found ways to create goodwill figures that we plucked out of thin air. So why can't we create a goodwill for how well we impact the materiality of our actions on all stakeholders? Why can't we work on that kind of creation? Are we that lazy?
Well, part of the problem is, I think, is there is so much strength in the financial community that it exercises so much leverage under the process. I think that's a difficulty. And there's something called intangible assets. Let's throw another term out there. And what has happened, as Monique pointed out, is that we've seen this flip from 10% intangible, 90% tangible to the other way around right now. Every time you spend money to invest in people, to help people grow and develop and learn and build relationships, accountants consider that an expense. It's written off. There is no potential value. So when you talk about goodwill, that is one of the most fundamental issues that we have in one of the biggest communities that's part of this whole process right now, is they don't know how to do exactly what you said, Cecilia, which is you're creating goodwill all the time, right? Every organization has goodwill. The trouble is it's only crystallized when somebody comes with a checkbook and says, okay, here's how much I'll pay for your business. Oh, now we've got to handle that. But it's always there. Every time you invest in people, you're creating value for the organization, whether the outcome is better relationships or IP or replicable knowledge, whether you codify it, whether it's not codified or not, but it's all value creation. Money.
Dominic, what do you see organizations reporting in terms of how they're measuring the value of their people?
I have a little bit of a different perspective. And Cecilia, you hit something that's really important, ESG. And the bond markets and the financial and Wall Street community, they're investing heavily in organizations that have high ESG scores, their environmental footprint, how they're impacting the environment, societal, how they're treating their employees, making sure they have good safe conditions in place for their people around the world, and then the overall governance of these organizations. The area that they're trying to really focus there is when they do report their ESG scores is how do they build a framework around it to make sure that they're able to really monitor those organizations and making sure there's some independence, because right now a lot of it is self-reported. But they are looking to control that and to really develop programs in place for those high ESG scores in those organizations. And we're going to find over time that those organizations that are really driving in good environmental practices, treating their employees very well, and then have the overall governance to making sure that they're meeting their obligations are going to be really good organizations, and you're going to see the financial communities investing in those organizations. So my spin on that is a little different, and I do see that over time that it's going to be very positive for people as well as those organizations.
I think the time reference is actually important. This is the Asset Leadership Network, and the people we engage with are wonderful, just 100%. It's incredible. But we're the leaders. Not everybody else is thinking like this. So what kind of phrase can we develop to replace people are our greatest assets? Is there anything that people can suggest or recommend? Now,
you didn't like my social, the relationships, the relationships.
Yes, I did. Restate
you want
that?
somebody else to say it? Okay.
No, you can restate it.
And
Monique,
Cecilia, it's interesting the way you say that, because of course originally it was human relations, and then it was changed to become human resources, and it really, I think that was a backward step, because what it means is, like Dominic has mentioned, scores for this and that and the other. We're trying to reduce everything to a number, but it's fundamentally more complex than that. So yes, quantitative measures are useful and they allow us to make comparisons, in a more easy way, but they don't tell you the whole story. We've got to take qualitative with the quantitative so that we can understand what's really going on, because it's easy for big companies to manipulate their numbers to look good, when you're only looking at one number. But how do we understand what's really going on? So I think that's where, and this is what, as you've said, Nick, yes, we've tried to convert this all into something that can be understood within the existing accounting framework. But why do we need to do that? Yes, it has a certain usefulness, but it's not the whole picture. Not everything is about what's on the balance sheet. So what we need to be doing is actually ensuring that people are looking more widely at the information that they assess when they make decisions and make investments, rather than just looking at the numbers. I think that's a really important aspect of this, because what happens is then, as we've seen, goodwill is this very nebulous idea. It's what's left over when we've accounted for everything else. But what we need to be developing, because of the importance of intangible assets, is a far better understanding of what that actually constitutes. Because if we're not capturing that value, we're also not managing the risk, where fundamentally there's this bit of a black hole that we aren't properly understanding, but we need to understand better, because it does mean, as Ron has said in his question, we've got to create an environment where people can be creative and do their best work. Otherwise, none of those numbers will look good in the end. So, yeah, so I think sometimes we have to don't accept the premise of the question. Don't accept that the status quo is the only way to do things. And I think it's problematic that we're trying to shoehorn people into a financial framework that isn't designed for that. And as we've said, even though I do agree that the intent of the original integrated reporting framework is to capture a lot of these things, but now it's in a lot of ways being reduced back to how do we turn it into a number on the balance sheet. And I mentioned in my paper the World Economic Forum's recent paper around, and it's actually called Human Capital Accounting. And if you read it, it's just a little bit scary, because they literally have an equation that says human labor plus machine labor equals total cost of work. And it's, like Marty has been trying to make the point, labor and, men, machines and money, as it might have been said, but they're trying to merge the men and machines and make them interchangeable. And I think that's fundamentally flawed.
You gotta let Marty comment on that too.
Yeah, I think Cecilia hit it on the head with the idea of relationships. And I think no matter how ESG scores are reported, they should be identified exactly what's in them to the point where you can question what the measurement is. For example, relationship is good, but we need to not isolate labor or humans outside of the other factors. So I think it's always critical to look at, capital, labor, and land. And, being from the Henry George School of Social Science, we are very focused on the importance of land, because when people own land, they're essentially keeping other people from entering. So they have an obligation to, pay back to society. So once you understand those three factors of economic production, then it's almost impossible to squeeze out labor as something that could be capital. I think, so I would go with Cecilia and just say that we need to look at human relationships, or however Cecilia wants to formulate that, but it can't be human capital.
Hey, Marty, I like that you gave me the power, but who I want to take over is FASB and stopping them from making a determination where they don't look at double materiality. And I'm not sure when they look at double materiality, how much of that is quantitative versus qualitative. I know that in ESG, it's much more qualitative what you're looking at, but you can measure qualitative things. How many times did you meet with the community? How many times did your teams look at their processes? Who did you look at to look at the systems, internally and externally? Who has the impact? Who does the system impact? These are questions that you can create some things for. It takes time. This is hard work and nobody really wants to spend the time to do it. But the point of doing this kind of work and boiling it down to relationships and relationship networks, maybe there's a score that is, I don't know. We're brainstorming on this.
I will bring up Jim Dieter point. Our CEO is an avid baseball fan, and he is quite aware of the fact that sabermetrics, the introduction of measuring players to an infinitesimal level, has dramatically changed the game. And now there is a way that they have a rating. Jim, if you could type it into the chat, that would be great, where they take the average of all the first basemen, and what's their batting average, what's their errors, how many runs have they scored, etc. And the average is 1. And your own rating could be 1.1, which means you're above average, or you could be 0.90, which would mean you're below average. So it is measuring people by numbers, but it's giving everybody a fair chance. No, it's not. Okay, Nick.
Well, my concern is that so many of the measures are exactly that. They're at the people level. I think the point that we're hearing from a lot of the panelists is that the value is in the collective, right? The value comes from the team, not from the individual. It's a combination of the team and the individual player, which really goes back to a couple of things. I mean, Dominic was saying about ESG moving forward, and I don't dispute the fact there's some really good stuff going on out there. What concerns me is you see areas like the SEC, for example, the sort of statistics that they're suggesting possibly should be added to the annual filing requirements. And we're not really talking about social outcomes. We're not really talking about the effectiveness with which we build a community at work, that reduces things like mental health, for example. So as long as we try and sort of bring them back, exactly as Monique said, to these sort of single factor financial items, because it is easy to measure those sorts of things. Yes, it is subjective to measure some of the other things. But for example, if we talk about diversity and inclusion, I'm all for talking about, you know, how many people do you have in management, how many people have in the other ranks. But the most important thing is, I don't care, you know, so much about how many you've got hired. I care how you treat them when they're in the workplace. Those are the things that worry me about the ESG reporting. Is we're talking a lot of numbers and activities. We're not talking about the, if you like, the health of the community that we're creating and the workplace health that is the stimulant for taking skills, education, and experience and really leveraging them to the most effective benefit, to optimizing the organization's performance. And that's the big difference, I think, between machine assets and people assets. In people assets, you know, if we call them that, put whatever label you want on it, but we have to do two things. Well, yeah, with people, we have to have skills, education, experience at the individual level, but we have to create an environment where collaboration, cooperation, communications, and all of those leveraging effects are going to allow you to convert technical capability into performance outcomes, to create
Dominic.
an environment for the people.
Yes, and can I
Oh, wait,
hook on to
Cecilia,
that?
can I ask Dominic?
Okay,
he
I
has
just
a company.
wanted to okay, that's fine. I'll come back to the question to Nick because it's to Nick what Nick just said, but you can go ahead and bring
Well,
Dominic
I would like
in.
Dominic to talk to what Nick just said. He has a
Okay.
company with people. What are some of the techniques and what have you found effective?
I mean, how I opened up, I truly believe that, you know, my success and our organization's success is based on the collective efforts of every individual on our team. And I'm just, I look at myself as a shepherd to help them get to us reaching our goals and having them spread their wings to really drive in success. You know, we get into a lot of different business activities and sometimes we have to make tough calls where some that I learned a long time ago is, you know, you get into new businesses and some of them take off and others, you have to know when to make some tough calls and what I would call cut bait and making sure that we should, you know, maybe put things on the shelf or take a different avenue. And, you know, I just look at it as our people and we've got a great team and I can't thank my people enough around the world is to really focus on, you know, what our mission is. And it's really about driving trust in the activities that we do around the world and to make sure we have the best players out in field and making sure that we hear them and listen. And, you know, like I said, I just, you know, our success is based on that collective efforts of people and making sure that we recognize those successes and making sure that we're treating people with dignity and fairness. And, you know, we have a great organization and that's how I see it.
Excellent.
How about with your clients? And I know the work that you guys are doing at ABS is so superb. How about, and everybody I've met on your team, you know, as we've been doing work with you guys, everyone is right on target with what they want to do. I'm curious, as you go through your various clients, are you seeing them do more of what Nick said, and that is focusing on what Marty says, which is nurturing the internal and the external relationships? And are you seeing them incorporate that in their ISO 55000 work? Are you seeing them incorporate it generally?
Well, organizations that are implementing any management system, whether it's an ISO 55000 program or an environmental program, you know, it depends on the stakeholders and the communities that they're working in. But, you know, the organizations that implement these programs, they're doing it to really separate themselves from other organizations. They want to be leaders in their business activities. They want to make sure that they're promoting good environmental practices, whether it's health and safety. If it's an asset management program, they want to make sure they're getting a lot of value out of their assets and making sure that their people are completely trained and they understand what their impacts are based on their daily functions. So, when we look at the organizations that we audit, we call them, we consider them best in class, and that's why they deserve a certificate. Now, not all of them get there. And others we might raise non-conformances or areas they need to work on in order for us to give them a certificate down the road. But for the most part, when we're out in the field, great leadership. They really believe in the programs that they're rolling out. They believe in the people to get it done, and we see some good things out there in the field. But we also see some things where they need to improve, and that's the whole focus of these management system programs also is continual improvement. And making sure that they identify those things and to make sure that they improve as an organization and as people develop within the organizations.
So
Did I answer your question, Cecilia?
Yeah, and I guess part of my question was, do you see them being very mindful about their stakeholder engagement? And have you seen any interesting measurements come back from what they've been doing? Have you seen where they've started quantifying how often they meet with the various stakeholder groups and things of that nature?
Well, that's part of some of the standards is they have to identify what their stakeholder requirements are, right? And then the communities that they're serving. So when they're out there doing their work, and we're out there auditing them, they're very focused on making sure they're meeting stakeholder activities and making sure that they're meeting those milestones. Now, they do identify areas where they need to improve, like especially with some of the government agencies that we might audit organizations towards. They need to meet certain protocols in place. And then they're always striving to drive that continued improvement. So they're very well aware of what those activities are and what those milestones are that they need to achieve. So I see it as that they're very focused on it.
Excellent.
Marty, what were you going to say?
yeah, I guess I was looking at the clock and I was saying that my suggestion for what we do coming out of this is that we look at the practical and intellectual heft that we have among us to reach out to those organizations that are going off the rails. I think I heard FASB was trying to do something that is going against what we're trying to say here. And we issue a paper or some kind of statement from our organizations and just say, you guys are going in the wrong direction, and put it on record.
Nick, I think Marty just made you the chairman of a committee.
Especially
what-
since you know.
Well, I think one of the dangers is, we've all heard the, what was it? Was it Sloan many years ago said, what's good for General Motors is good for America. The belief is still, I think, in the corporate world is don't bother us with all of this external activity because we will do the right thing. And I think, sadly, I would say probably 85–90% of CEOs will do the right thing. But unfortunately, we still have the bad players out there that won't do the right thing. It was great to hear, Dominic talking about, the engagement of the stakeholders and things like that. It's how you treat people. You say, for example, having to make the tough decisions, which is the reality of the business world. And I think when the whole issue of people management and people leadership comes to play that is the touch point when you have to make that tough decision is how do you deal with the human aspects of it? For example, sure, we all know that we go into new ventures and sometimes they don't work. I mean, you've got to try though. I mean, you've got to try stuff. If you try stuff, you won't know what does work and what doesn't. But if you bring people, trusting people, as you use the term, trusting people along as part of the journey, then you've got to reward that in terms of, okay, we stuck with you through this venture. Now, don't just cast us aside as a result of that venture. How are we going to now work together so we can reintegrate back into the business or do something different or get retrained? But it's that whole focus on how do you deal with the tough decisions related to people as human beings.
Monique was going to say something. I saw you thinking out loud.
That's all right. It's just Dominic. It was great to hear what you said, but it sounds as though
Well, before we go on, I would like to say that this is too good to end, but we're experimenting with an evening program. So I'd like Nick Kanoki to provide a formal end and then let everybody make closing statements. And I bet you some of the best discussion will come when all the pressure's off, the formal session is over, and then we can talk amongst ourselves.
Yep, sorry to cut you off, Monique. We'll get right back to you. But before that, we just wanted to, again, thank everyone for attending today's session and thank our great panel for being here today and providing such interesting discussion on an important topic. And we also, of course, want to thank our patron members, especially ABS Quality Evaluations for Dominic's participation here today and on other ALN programming, and organizational members as well. Exciting news in the US tag world, release of a new campus website. You can learn about that more in our newsletter on our website or by visiting assetmanagementusa.org. And that's just one of many exciting things going on with our organizational members. So please reach out if you're interested in working more with the ALN. And with that, pass it back to Mike Bornero.
So thank you to our audience members. And if you need to go take care of children or have dinner, go right ahead. So now back to you, Monique. Sorry to have to cut you off.
Yeah, we're still recording.
Yes, we're still recording.
Yeah, no worries at all. I was just going to ask in response to what Dominic had said earlier, that it sounds as though, and please correct me if I'm wrong, it sounds as though the companies that you're dealing with have voluntarily chosen to implement these management systems and they're pursuing it as a way of competitive advantage or quality improvement. In Australia, we have a number of state governments who have mandated certification or alignment to ISO 55001 or a similar system, particularly for government entities and in certain industries. I believe there's some other jurisdictions around the world, I think the Netherlands, perhaps some other European countries, South Africa, where it's likewise mandated. And so I think there can be a bit of a difference because then you've got some companies who are in fact starting right at the very beginning at a very low level of maturity. They've been given a deadline by which they have to do this certification. And so they're really trying to tick the box and meet the minimum requirements, and that don't necessarily, you're not necessarily seeing what you've reflected there, which is, you know, companies who are already ahead of the game wanting to get better. Certainly I see some of that in my work, but it's not always the case, it's particularly in a context where it has been mandated. I guess that's, yeah.
And you know, Monique, you're right to a point. You know, there are certain industries that do mandate it, like aerospace, the medical device community to sell your product in certain market segments, automotive, of course. But there's a lot of oversight that goes along with it. You know, the accreditation bodies, they're out there auditing us as well as getting out and witnessing some of those clients. And, you know, they're also very focused on if there's recalls coming into place or in the, let's say, the automotive industry, if there's products that are being delivered that aren't meeting specific quality objectives or environmental objectives. You know, there's a lot of oversight to those organizations. So, you know, it does depend on the client, and it also, you know, it depends on the auditing organizations themselves, right? So it's very important. You know, when I look at ABS and ourselves, it's, you know, I also talked about trust, right? And it's one lie destroys 1,000 truths. So it's really important for us to make sure that we're doing the best work that we can out in the field and making sure that the ABS certificate means something when it's hanging on the wall. But there are other you know, organizations that might look at things differently. But I think when you look at the overall certification market, most of those organizations want to do a good job. The focus is continual improvement. They want to make sure they're getting better. Us as auditing organizations are supposed to be evaluating that, and our non-conformances that we raise drives them towards that. And then we also see, and I was just out at a client, I'll give you a real life example. We're bidding on a client in Mexico, and the reason that they're coming to us is they felt that the auditing organizations that they've used has kind of gotten to its end of life. Like they're not feeling like they're getting enough value any longer. They want a new set of eyes in there. So it's, those type of organizations is what I really call those best in class organizations. They really believe in it. They want to drive and be excellent. And, that's what we try to focus on.
Well, also, it's interesting that in your clients that are in Latin America, Dominic, because they were mandated, especially in the utilities, the electrical utilities and the like, they've been mandated in Chile and Brazil and other places to use ISO 55000. And what they have found is that they have had positive increases in how they interact with relevant stakeholders and expansion of the term relevant, and doing things like Marty said in terms of being mindful and intentional about the meetings that they schedule and having ongoing meetings so that they are getting a broader perspective on managing risk, and they are finding higher quality and higher acceptance in their communities in terms of the work that they do. And so it's generating a different level of return for them that is a qualitative return, again, on their role as corporate citizens. Yeah. And so we've got to think about this as maybe a citizenship, because the question is, as a corporate citizen, what are you doing to make an impact in the world? Not just your particular mission. What is your mission towards? And how are you creating that? Yeah. And to Nick's point, if we're not doing it so that everybody is going to Marty's orchard, and we're not fertilizing so that every plant and seedling grows, we're not going to get that.
Yeah. And Cecilia, you're right. I mean, because if you're not engaged with the stakeholders, things change over time. So you really need to be plugged in of what those changes are. If there's new regulations that are coming out, you get a new competitive environment. And I always believe when you got new competitors come into the space, the rules of engagement change. So you really need to make sure that you're very plugged in.
I think, it's very interesting when you talk about when things change and staying in touch with the stakeholders. I think that's one of the things that the years of sort of team development stuff taught me in business is that, we often think of team development as a linear focus. It's the 4-step, storming, norming, conforming. I forget what the 4 steps were, but what you actually learn in business is not static. You can't linear team build. Team build is something that changes every time the dynamics of the human beings in the team change. So, it's like a sports team. It's like any other collective group of people. There is a uniqueness into the interaction between the people in the collective. And so, absolutely, you have to be out there constantly changing because, the players are changing in your customer stakeholders, your supplier stakeholders, regulator stakeholders. How many people make that mistake because they just sort of keep regulators at arm's length versus keeping up with what's the thinking? How is it changing? Where are they going? Yeah, absolutely.
Well, one of the things that all of this points to, as far as I'm concerned, is the value of ISO 55000 and being certified or following the guidance of ISO 55001. Because if you follow the simple steps, you start to begin to address all these things. And that's first time I read it, I was like, this is it. This is great. And the creation of the Asset Leadership Network was to promote ISO 55000 in the US. And it is leading to these kinds of discussions, which I find very fascinating. And we are on the leading edge, and us having these discussions, having it on record, sharing some of the excellent highlights that you all have had, and then we'll spread this out. So that's kind of my closing statement. If everyone would like to make a closing statement, Dominic, you went last in the introduction, so we'll go reverse order. What do you, anything you'd like to say in a closing statement?
I just want to say thank you for having me participate. You know, I find these discussions really insightful. I learn a lot myself, and you know, to me, it's all about people, and you know, you treat people with dignity and fairness, and really believe in their abilities, and give them the freedom to act. Remarkable things happen, and you know, that's my closing statement, and it's, you know, I really love working with people. So thank you.
Well, we have seen that you act that, you just don't say those words. So thank you for being a people.
Thank you.
And then who was second to last? That was Cecilia.
Backwards. Well, again, always wanting people to be mindful of what they're doing, who they're doing it with, how they're doing it, and who else might be impacted, and making them grow and invite everyone to the table so that whatever they're doing is prospering everyone in their community and making a difference. And you can prosper without making somebody wealthy. It's, you know, there's ways to prosper somebody that's not monetary.
Well, thank you for your passion and for bringing it all the time, Cecilia.
Thanks.
Marty?
Okay, well, I appreciate the opportunity to be here. Did want to bring up something and just be very clear that I'll never utter the words human capital or land as capital. You know, we didn't mention much about land, but it's very critical because we see where big developers are getting tax abatements for 20 and 30 years without providing the kind of affordable housing. And, you know, that's just money out the door that should be going to something productive. So we can't let go of the idea of what capital and what isn't, because you know, it's a slippery slope to open the door for human capital, and then we, okay, well, land is capital, and that's kind of like a mortal sin.
Thank you. I was hoping you'd have something strong to close on, and mortal sin, it doesn't get too much stronger than that. So, Nick?
I find it stimulating and rewarding when I can participate in a discussion like this with kindred spirits. It gives me hope that things are going to change, because there are so many people out there that really do want to build a better world, want to look at the success of capitalism. The system works. We've just got to figure out how we can make it work better for all of the people who are part of it. And I think it starts at the individual level by wanting to be a change agent. But I think it's also a question we have to ask ourselves every day in the one-on-one interactions we have with people. Are we in the people demolition business, or are we in the people construction business?
Love it. Thank you for ending on that one. That's a highlight. And Monique?
Yeah, thanks, Mike, and thanks so much for inviting me to be part of this conversation. It's been fantastic. I wanted to close with something that I mentioned in an earlier conversation we had, and despite this being called the Asset Leadership Network, we lead people, we don't lead assets. And I think that's really, really fundamental to what we've been talking about here today. And I think there's just an enormous opportunity. The word potential has been mentioned a few times, and I think it's so important. People have enormous potential, they have enormous capability, and if we undervalue them and we dehumanize them, we are not accessing that enormous potential. So I think there's a huge opportunity through leadership with groups such as this to open up those opportunities and unlock that potential, and to really see the great things that people can do. So that's what I would like to see out of this. Thank you all very much.
Excellent closing statement. So thank you, Monique, and thank you all. Thank you, Nick Kanoki, for assisting and producing very effectively. Always appreciate your assistance, and thanks to the audience. Appreciate your comments and input.
Thank you, everyone. Have a great night and be safe.
Hey, thanks.
Thanks. Good to
Thanks,
see
a
you all.
pleasure working, talking, brainstorming with all of you. It was
It was great.
work. It
Yeah,
was
it really
awesome.
was.
Thanks. Stay healthy.